Good day, everyone. It's a new day in the world's financial markets. Today is December 11th, 2025. This is part number one. Part number one is dedicated to discuss the general view of the markets, and we shed some light on what on our future expectation for the markets, mainly U.S. equities and gold. As usual, we start with gold. This is the daily chart of gold. Nothing has changed. We're still looking at resistance above 42.27, which is pretty much the middle of this bar from the 21st of October, when the market dropped big time. The middle of that is 42.27 on the XAU. That's where resistance starts. And you can see lately, we're moving sideways. Every time we rally into this number or above it, we sell off, and then we rally again, sell off. So we're going sideways here. It's been painful action. But if you understand that at 42.27 or above, you sell, you don't buy, you're in good shape. You're not losing, okay? The market is not moving away from your price if you're going short up here. So that's fine. We have patience. We're still short, and we are waiting. As far as closing this short, the best price to close would be around 40.50, which is the 50-day exponential moving average. As far as going long, I like to be close to the low achieved on the 28th of October. So we want to be around 3,900 to start fighting, to start buying long and keeping the positions for weeks if we have to. Same thing here for the short. We are willing to wait a few more weeks. Keep in mind, when the markets drop, they go sideways for about 3 months. This is the history of trading gold. 3 months sideways action. This will take us to the end of January before the 3 months expires. And maybe by then, we'll be looking at a different pattern, potentially maybe a new high. I don't know. Or maybe we start a new down leg. But expect sideways movement until then. And like I said, 42.27 we sell. Below 40.50 is where we should cover. Below 3,900 is where we buy long. Okay, that's as far as gold. The average move per day is 57.5 points on the XAU. That's based on the last 9 days. That's the average high to low move on average for gold. Take a quick look here on the NASDAQ. It's the same idea, except that we don't sell short. We only buy NASDAQ, especially if we drop below 25,000 on the NASDAQ. We are buyers. We're still long. We're holding on. We will close only and not short above 26,000, okay? And so we will liquidate our position above 26,000, and we will go long below 25,000. Other than that, expect sideways moves. It's kind of similar to what's going on in gold. We're towards the end of the year here, and everything is like status quo. Markets are trying to hold on to their gains. There's no sell-off, but there's no advance. It's just status quo sideways. And we're aware of that, so we will be careful not to chase on the way up or on the way down. We kind of fade the markets for the most part. NASDAQ moves within 384 points. S&P is 67 points. That's based on the last 9 days. That's the average move from high to low. Yesterday, the Fed met and they announced a cut of 0.25 percentage point or 25 basis points. As expected, now we're at 3.5% is the interest rates, the Fed funds rate, 3.5%. That's basically what the overnight lending rate is between banks, 3.5%, which was expected. It caused volatility in the markets. They rallied close near the highs, but now we are off those highs. So how we trade today will depend on how we read, how the data acts until from 3 to 9 a.m., pretty much Eastern time. So we will have a better idea come 9 a.m. how we are going to trade for today and today only. Otherwise, the discussion so far has been about swing trading, trades good for days or weeks at a time. So we'll come back by 9 a.m. and discuss how we're going to trade for today. Until that time, I wish everyone the best of luck and thank you.